Hello and welcome back. This is Angus Levy for DigiTrade FX. Now, we've already gone through what binary trading is, how to set up your account, and all of that. Now, what you're looking at now is actually my set of charts that I use for trading with my group. I have a group that I trade with twice daily, normally for maybe 15-20 minutes at a time, and then we stop. But with DigiTrade FX, we'll be trading at least once a week, and for anywhere from between half an hour to an hour, we'll be doing a trading webinar, which will involve teaching and actual trading binary options. Now, what you see in front of you are, for example, 6 different trading pairs that I might use in a particular session. Now, with my particular strategy, what I look for on the binary cent platform is I look for the top 6 returning binary pairs, and we use them, then we put them into my MT4 and we look for signals for those. Now, looking at this at the moment, you may think, oh my goodness, how will I ever be able to understand what he has in front of me? And the truth is, at the moment, you probably cannot make head nor tail of it if you have never used charts before. But don't worry, I'm now going to start from scratch, building up charts for you, and I'm going to explain what each item is on the chart and how I use it, so that you will then have a better understanding of how I operate. So I'm just going to open, for example, USD here, Euro USD. Now, what you're seeing here is what's called a line chart. So all you see is prices going up and down in straight lines, going all over the place. However, we use what's called candle charts. So I'm just going to switch this over to Candlestick. Now, if you just give me one moment, I'm going to change that. So all I have to do is zoom in. And you see now we have what we call candles. Now, candles are very simple. You've got one's going up and one going down. Now, I'm just going to actually change the colors of this. So if you give me a moment again, I'm just going to change the colors so that they're red and green, which will make it easier to understand. So 1 second while I do that. So I've now just changed the colors to red and green. Now, basically, a red candle is when price is going down, and a green candle is when price is going up. Now, for example, on a red candle, when price is going down, at the beginning of each minute, it starts here at the top and then moves down. Now, during that minute, it may move all the way down to here and then back up again. Okay? And this here is where the minute finished. Okay? Now, in that time, it actually, you might be able to just see there, it popped up one little pipette and then back down again, also during the minute. So there were 2 tails. Or, for example, this is what we call a bull candle or a call candle. And here, it would have started here. Sometime during that minute, it went down and then back up again, all the way up to the top here. And then finally, it finished its minute here at this point. Okay, so the start and finish of the candle is filled in, and you have lines just marking the bottom and top of that distance that it would have traveled during the minute. So this is what we call a candle chart, and I like to use it because it's simple and easy to see. And if you look here on the right hand side, you can see how as time goes on, that bar is moving up slowly or down depending on price movement. So that is our bar chart. Now, it doesn't tell us a huge amount, so what I like to add in are different indicators which will help me tell me the general direction of price over the period that I'm looking at. Now here it's pretty obvious that price has been moving downwards, but if you think about it, it has also been moving between 2 points. So if you draw an imaginary line going down here and another one going down here, it's called a channel. So price likes to move between channels. So let's add in our channel chart. Just give me 1 second while I add that in. So I'm just going to look for it here on my, here we go, SHI. So I just move this indicator into here, click OK, and there is our channel chart. So you can see how price is bouncing now between these two areas here. The next one I would open up is what we call our holy channel, and that is what's a non-linear. This SHI is what's called a linear channel, but the holy channel is what's called non-linear. So I'm just going to open that up again. 1 second. And just find my holy channel. Here we go. Not sure if that actually added it in properly. 1 second while I find that. I think I added in the wrong indicator. Give me 1 second. Okay, so now I've added in the holy channel, and you can see here how it bends up and down depending on the general direction of the currency pair, and price will move in and out, up and down as price goes along. So I like to use that also to gauge whether price is overbought or oversold. Now, the next indicator I'm going to put in is what we call a value charts indicator. So that I will find down here. If you just give me 1 moment, I will add that in for you. Okay, so I've just added in the value chart here. Now basically price has a value. It's either overbought or oversold. And although these look like candles similar to up here, if you look, they don't actually move in the same direction all of the time. For example, here the candle charts are moving up and then they start to move back down. What does that mean? Because they're still moving up here. Well, what it means is that the value of that candle became overbought at this stage here, and then it started to move down, so it wasn't so overbought. And then over here it went right down to being oversold, and then it started to pick up again a little bit, and then back down again, and then up and down. But look here, the candle here, which is the same as this one here, is at the same level as the one over here. Yet there's quite a difference in the price value between them. So the actual valuation of the currency pair may change from time to time against price. So here it's overbought, here it's oversold. And normally I try and catch my trades when it's overbought or oversold, and then take a trade in the opposite direction. But I don't just use the value charts in order to decide whether price is overbought or oversold. I also use something else called the MBFX, which I will just add now and explain that to you. Okay, so now you can see this is the MBFX line here, And basically what it's doing is, again, it's just tracking the value of price as it goes up and down. And it gives us an idea of whether the value of that price is overbought or oversold as time goes on. Now, we've two lines here. We've one at 80% and one at 20%. So usually I look for price to be ideally either near, at, or above the 80% or near, at, or below the 20% green line. And that's when I can fairly safely decide to enter a trade. So here I'd be looking for price on the value chart and on the MBFX to more or less agree with each other that yes, I'm oversold or overbought. So here would have been a good place for me to enter according to both of these indicators. Now, I've one final indicator which I'm going to add, and I'll do that now on this section here and come back to you in a second. Now, I've just added in the Bollinger Bandwidth indicator, and that is this red line here you see moving up and down. Now, what does that mean? Well, it basically is following what we call Bollinger Bands, which I'm going to add in next. And those Bollinger Bands, you'll see, will increase and decrease as we go along. In fact, I'm going to just add them in quickly so it makes more sense. Okay, so I've just added in the Bollinger Bands up here. Those are these three lines here. So you have an upper, mid and lower Bollinger Band. And basically what they're tracking is the how the candles are moving out and in as price expands and contracts as it goes along. Now, the problem is at some times price gets very narrow. In other words, you get a load of small candles and there's not much volatility. And when the market is like that, it actually can get quite dangerous to trade particular indicators. So we use the Bollinger Bandwidth here to actually tell us when it's okay to trade certain indicators or not. Now, basically you see there's two red dotted lines here. One is at 0.0005 and the other is at 0.0008. Now, the rule of thumb is when price comes below 0.0005, I do not take trades on certain of my arrow indicators, which I'll explain in a little later. And we usually wait until price is back up above the 8 line before we start taking trades on those arrow indicators. But anywhere between the 8 and the 5 is okay. But as soon as price goes below 5, we wait until it comes back up above the 8 again. So in other words, we wouldn't trade from here until here using the arrow indicators, which I'll show you in a minute. So now the next thing that's important is to add in what we call the Fibonacci's, and I'll do that now, then I'll explain what they are. Now, Fibonacci was an Italian mathematician from, I think he was the 1700s, may have been earlier, and he discovered that in nature there was a mathematical formula to many of the designs that we see in nature, whether it's the petals on a flower or the shape of a shell, and many other things in nature, like a honeycomb and all of those sort of things. And not so long ago, well, about 20 years ago, maybe a little more, a particular trader was studying Fibonacci, and he wondered, would trading have anything to do with Fibonacci as well, the movement of price action on charts? So he added in a Fibonacci scale onto his charts, and lo and behold, he discovered that yes, price did tend to go between certain Fibonacci points. Now, in this case, it's picked a high here and a low down here. And you'll see that, price can come down and bounce off different Fibonacci levels as we're going along. At the moment, it's just on the 61.8 level here. And you see how it's bounced back up again off that level. Now, it may continue on down again as it just has, but quite often you'll find that price will bounce off various Fibonacci points. The most important ones are the 00, 38.2, 61.8 and the 100. Now can go beyond that too. If I just minimize this chart a little bit, you'll see that it goes up to 161.8 and 261.8 as well. But for us, while we're trading, we'll be just paying attention to price as it moves up and down at the moment, and see how again it bounced off here. It'll also tend to bounce off the mid Bollinger, okay, and the lower Bollinger and the upper Bollinger lines as well. So all of those things we're paying attention to. At the moment, the general direction of the currency pair Euro USD is a little sideways, maybe slightly downwards, and you see the way the holy channel is now beginning to curve down. So we expect that price will probably carry on down over the next period, but in between that it'll move up and down every so often as well. So it's always useful though to know what direction price has been going over the longer period. At the moment I'm on the 1 minute chart. There's 5, 15, 30 minute, 1 hour, 4 hour, one day, 1 week and 1 month as well. So I'm just going to add in another indicator which will help us to see what the general direction of trades are. 1 second. So I've now added in the indicator which will tell me what price has been doing over the period. So on the minute scale, price has more or less been, as you can see here, going sideways for the last little few minutes. So it's not actually going in any particular direction. And the same on the 5 minute scale. On the 15 minute scale though, price has been going up. As you can see here, in the last 15 minutes, price has gone in an upward direction overall. Over the 30 minute period, again, it's been going more or less sideways. So it's yellow. Now over the 1 hour period, price has been going downwards. So over the last hour, let me just find the last hour here. So roughly from here to here is 1 hour period, and you can see that it started high and is now finishing lower up in the last hour. So we have a red, and the same for 4 hour, the 1 day. Over the week, price has been doing very little. It's been more or less going sideways, and over the month, the euro has gone down against the dollar. Now you can see how the 1 minute just changed there to a red because price went down quite a bit. It's now since recovered and is back into the sort of no man's land area. But that box probably won't change until it makes a decision exactly which way it's going. Now, because we trade 1 minute trades, it's always useful to know how much longer is left in a particular candle. So I'm going to just add in a clock which will tell us how much longer is left on each candle. So I've just added in the clock, and here you see that a new minute is just started and it counts down from obviously 00 down to 00. So we've got 51 seconds left on this particular candle. And you'll see here there's a little round circle with the number 2 in the middle. What that's telling me is in the last 5 minute candle, there's 2 minutes left of the 5 minute candle. So we're in the last 2 minutes of the 5 minute candle. And that's always very useful to have as well. Okay, so now we've got most of our indicators now here before us. Another thing we're going to look at is what we call support and resistance. And that is where price tends to bounce between different points. For example, you see how quite often in the last hour it's only come as far as here and then it's reversed back down, because that's what we call a line of resistance. So I'm going to add in the resistance and support lines now so you can see what they are. Okay, so I've added in the support and resistance lines. Now you see these blue dotted lines here, and then we've got red dotted lines up here. Now the red dotted lines are the resistance lines, which is where price tends to find resistance and bounces off. So you'll see over the last couple of hours it's been really finding resistance between these two areas here pretty consistently. So when I see price coming up to these points, I'm fairly confident in taking a put or a trade for the price to go down in the next minute or two. And at the same time, we have at various different levels what we call support lines. That's where price can only go so far down before it bounces back up. So we have a support line here, 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 and here. So when price comes back down, I'd be keeping a good eye out for this area here to see whether price will bounce off it. And if I get an arrow indicator telling me that, yeah, actually price has found its support and is going to go back up, I will take a trade for a call. In other words, for the price to go back up. Right, well, these are all my main indicators. So what I've done is I've pulled a lot of these indicators and others and designed arrows to just give me a hint as to what direction price is going to go. So I'm going to add on in these now. These are ones which I've developed with friends over the last 5 or 6 years. So I'm going to add them in now and I'll explain them then. Okay, so the first of the arrow indicators you see is the blue aquamarine arrow here. Now, I don't actually trade these particular arrows, but I use them as an indicator of when price has breached the Bollinger bands, upper and lower. And it also gives me a good indicator alongside my other arrows. I've got yellow and main arrows, which I'll cover now in a second. But I don't trade these specifically, but I use them as indicators as to when price may be likely to turn. Now, in this particular chart, I actually haven't had any of my yellow arrows in the last little while, but if I just zoom out a little bit, you'll see that I did have quite a few going back here. Now, these arrows are triggered when the value chart comes up above 1.75 or down below 1.75. Now, in the last period, price has been ranging over quite a narrow area on the value chart, so it hasn't been triggering them. But over here, you'll see that it triggered one after the other here. And then you see price went down, triggered here, price went down, triggered here, price went down. And down here on the lower scale, it triggered it at minus 1.75 on both this candle, and then eventually started to go back up. So that's what I call my yellow main arrow. I'm going to put in my other indicators, which are even stronger than that now, to show you. Okay, so I had to actually switch charts because Euro USD hasn't been moving a lot recently, so I wasn't getting any of my main arrow indicators. But here you see on GBP CHF we have a magenta, and actually hidden underneath that is also a blue arrow, and then finally an orange arrow here. Now these there's navy blue, magenta and orange are all made up of both the value chart, the MBFX, RSI, and a couple of other indicators which you don't see there. And I set them at different levels so that it goes from yellow initially, then navy blue, magenta, and finally orange. Orange is really where price is screaming out that, look, I am so overbought. I'm at 95% plus on the MBFX. I've gone over the level 2 on the value chart. You know, I am so overbought that I can't really go much higher. So when I see this orange arrow, I will generally take a trade in the opposite direction. And then the final one is called the ISA. It's actually one that one of my members programmed for me. It's a brilliant arrow, and it's the one I use for most of my trades. It's this red one here, and as you can see, it's quite accurate. So it appeared here and price went up. In the next minute it appeared here and price went down, and again it appeared here and price went up. Now it appears in the candle previous to the present one, so in fact it was already in this candle here when it appeared, so I would have taken it and it would have won in this, you know, between this and this candle it would have won. And here again it appeared somewhere in this candle, and then I would have taken the trade and won. And you see it actually then gave another arrow for a call, and we would have taken it here and would have won as well. So when we're trading, I'll be looking out mainly for these red arrows, and we'll be calling our trades when I see them. Now, I don't trade purely on the arrows. I look and see for all of these other indicators to tell me whether that's a good strong signal or not. For example, this one wasn't the strongest arrow that we could have had, so I would have probably not taken that trade there. So I hope you found that informative and that it'll help you to understand a bit better about what you're looking at when we trade together. So this is Angus Levy for Trade FX, and I will speak to you all later.